Captain Hook.
Mr. Juice.
Ah, yes, Mr. Juice. So little boys and little girls, we're going to do our podcast today as it's kind of a spooky tax topics to commemorate Halloween. I know Captain Hook and I were discussing that we were going to do our top 25 spooky tax topics, but the number 26 is a personal number for me. It's my birthday. It was my father's birthday and my wedding date. And plus, you and I talk about this, always trying to do 1% better each day. And so we're going to do 25 plus 1. Captain Hook, what do you think about that?
Sounds awesome. I was quite impressed that you were willing to go mano a mano with the hook.
I'm ready. All right. So to start things off, I'd like to talk about ghastly gains. A lot of you out there don't really, or I'm assuming, don't really understand what capital gains are. And so let's just kind of, let's talk about that for a second. You have what they call short-term gains and, long-term gains. And so short-term gains are any asset that you hold for less than a year. Whereas a long-term gain, that's going to be any asset that you hold for longer than a year. So short-term gains are going to be taxed as ordinary income, and depending on your marginal tax bracket, it could be up to 37%. Albeit, our last podcast there, Hook, we discussed tax ramifications of the two candidates. And so those numbers and those brackets could change quite a bit. Agreed?
Correct.
Yeah.
So
go ahead.
Just for example, you're saying assets. Would that be like me ship?
Oh, yes, it could be. It could be a ship. It could be a stock. It could be any asset that you're holding. It could be real estate in that regard.
So as long as I've owned me ship for at least a year, I pay less taxes?
Yes, that's correct. Assuming tax capital gains stays at the current rate. Yes, that is true. We don't know what the upcoming election, obviously, little boys and girls, that could change vastly,
Oh, I see. And what if I sell me ship for, say, less than what I bought it for?
Oh, good. So, very good question. So, if Captain Hook decides to sell his ship for less than what he paid for, he would get a capital loss. And that capital loss could be offset against capital gains. However, if he has none, it would be up to a $3,000 loss, and that becomes a suspended loss that would roll forward, eternity up to 20 years, per se.
So if I sell me ship for $100,000 less than I bought it for,
yes,
I only get the gold that is $100,000 less than what I got. Yes. I can't write off the $100,000?
Not unless you have capital gains to offset that with. If you don't have like another ship that you made $100,000 or another asset, you would not get to, because you would be taking capital losses against ordinary income.
So I have to hold on to that $100,000 loss, except for the $3,000 that I can take?
It would continue to roll year after year until you have a gain.
Until I have a gain?
Yes, or another $3,000 each other year.
Oh. So is there a strategy then for me to sell me ship if I think I'm going to take a loss?
You could, right? And we could talk about that if you come into L&Y as what we call tax loss harvesting, okay? We could talk about that, but, let's not get overcomplicated and get into too much details at this time. Yes, I think you would be a perfect candidate for our tax services.
Oh, okay.
Captain Hook, there's a lot of things out there about phantom income.
Phantom income?
Yes. Like, for instance, if you and I are partners in a business and the business shows I made $100,000, you made $100,000, but I didn't receive $100,000. That's considered phantom income, but I still have to pay taxes on that.
Sounds like bad form to me. You didn't receive the money and you still have to claim it?
Yes, that's correct. Because the business that passed through generated, I might not have taken distributions out, but I'm not taxed on the distributions. I'm taxed on the current year earnings.
Oh, what kinds of rogue entity would that be?
It could be any entity. Or if you had some debt and I paid your debt, you no longer owe that debt. If that's the case, unless you are considered basically insolvent, you would have to pay income tax on the debt cancellation.
Oh, okay. So anything that I have that I don't actually pay for could result in income to me.
That is correct. Therefore, I think it would be very, very prudent that we get you in for some tax advising into Illinois.
Oh, I see. Okay.
Okay. What do you know about cursed credits, the common tax credits you might be missing? Can you tell me anything about that?
Absolutely. You have to be careful of these credits because with each of them, you must make sure you qualify. You can't just take them.
Qualify?
Qualify,
Well,
yes.
What would I need to do to qualify?
Well, for most of the credits, especially if you have one of these lost boys that you've adopted.
Ooh, the lost boys. That sounds exciting.
You could qualify for things like adoption credits.
Yeah.
You could qualify for child tax credits. You could qualify for, if you had Miss Tinkerbell watching, you could be paying her and
if we're talking about child tax credits, I want to understand something. Is there a maximum limit per each child?
There is currently a maximum limit per child. And the best thing about some of these credits are that some of them are refundable, which means that if the credit exceeds the taxes you owe, you could actually get some money back from the IRS.
So like residential energy credits maybe, huh?
Perhaps. But most people are aware of the child tax credits.
Yes.
Those are limited up to, I believe, $1,800 are refundable to you if you've surpassed the amount of taxes that you owed.
Oh, Hook, you seem so knowledgeable towards this.
Well, I do have many, many children that I have to take care of.
You do?
Yes.
You do. I admire that about you. So, should I book an appointment with you if I want to learn more?
Yes. Talk with Mr. Smee. I'm sure we can fit you in.
Oh, thank you. Oh, one of the things that really bothers me sometimes, my income tends to fluctuate. And so what I'm talking about is witchy withholdings. When this occurs, you need to adjust your W-4. If you're dealing with a very good tax preparer, tax accountant, tax consultant, they will meet with you up to 4 times a year because your income could change. You could get a bonus pay. You could get an uptick in salaries and wages. Something might change. You might get married. You might get divorced. You might have children now. All these factors should be carried out to ensure that you're proper withholding so you don't have underpayment penalties that's associated with that, Hook.
So are you saying that if my boss gives me a pay raise, the IRS is going to rake me for more taxes?
Absolutely. And if you're with a good preparer, they would be meeting with you up to 4 times a year to make sure when these life changes occur that you're well taken care of.
I see.
What do you know about the spooky state taxes?
Well, thankfully, on Neverland Island, we don't have state taxes.
Sounds like a great place.
It is an awesome place. However, I'm aware that there are certain places in these United States that you come from that do have state income taxes. Yeah? So you must be careful that you're aware of the state that you live in, and you must also be careful if, like me, you like to travel the 7 seas, that if you were to, say, work in another state that you don't live in, you might be subject to those state taxes as well.
I love to travel.
You do?
Yeah.
What kind of travel do you like? I prefer the boats myself.
I travel in my mind a lot.
Oh, okay.
I go crazy places.
I've heard of these sandworms. I didn't know if you like to travel on them.
Ooh, in and out of reality.
Ah, yes.
So, okay. Very good. So I want to talk about one thing, what they call the monstrous mistakes on tax returns. Hook, these are things that will create errors that might create delays on people that are getting refunds or could even trigger an audit. Everybody's aware of AI today and the sophistication with Internal Revenue Service, the transmittal of tax returns and tax forms, whether it be source documents or the tax preparation that the preparer sends to the IRS. Anytime there's what we call mismatches, so what the IRS is seeing versus what was filed either on the source document or on the tax return. When these things occur, there could be delays. There could be audits. These could trigger a whole barrage of things. This could be things from Social Security numbers that don't match up to date of births to already filed returns, a whole barrage of things. So I believe that it is absolutely paramount to have various different levels of review before a return goes out the door. In addition, you want to make sure that, you operate with a firm that will make sure that they, put identity at the utmost paramount so you don't have any breaches. That's the one thing I like about Illinois.
I see. So if I am someone who files my tax return and I never seem to be able to get my return or my refund quickly.
Yes.
Could this be a reason why it's taking so long for me to get my refund?
Could be a very good reason.
I see.
Not necessarily, but could be a very good reason. Yes.
Oh, skeletons.
I'll bet you got a lot, Cook.
I buried them all.
Oh, I love it. Oh, can you tell me about some of those skeletons, the unreported income risk that's maybe associated with that?
Yes. Not that I would say hide any booty that I might come across here or there.
Booty.
But
I like booty.
You must be careful. The IRS becomes aware of any, shall we say, contract work that you may be doing on the side. And if you take these payments and don't report them to the IRS, you may suddenly become a skeleton yourself.
Wow, yes.
Because the IRS gets what are called 1099 forms filed by all of these companies, and they will report the income they pay to you, and you are therefore required to file that on your tax return.
Mm-hmm. So, did they not used to be 1099 miscellaneouses, and oftentimes now they're 1099 NECs?
Yes, because there are so many forms of 1099s, and they decided that it was too complex to report all the various ways that you could have been paid. A couple of years ago, they split the 1099s up into 1099 miscellaneous and 1099 NEC, and the NEC stands for non-employee contract work.
I see.
Okay. So you could get multiple versions of these 1099s, or you may not receive one at all. Does that mean if I do not receive a 1099, I don't have to report that income?
Not under Code Section 61, you should report all income devised from wherever.
That is correct. If you want to avoid becoming a skeleton yourself, make sure you claim all your income.
Probably would be a good idea if I had good records too. Would you agree?
Yeah. I mean, I keep a ledger in my cabin of all the booty that I've stolen.
Oh, here we go. More booty. I love it.
But I understand people like to put things in the bank. Yeah. I don't trust banks myself,
No banks? You don't trust the bank?
Well, no, I want my gold available to me at all the times. So I bury it.
I like your style, Hook. I like your style. Oh, well, things is kind of crazy out there. The blood-sucking back taxes. Handling IRS notices. I know it's a scary thing when a client loses or receives, I should say, a notice from the IRS. It could be something like a CP 2000 notice, which basically there's some mismatches in income and things like that. There could be things like underpayment penalties. The thing that I like about Illinois, when these things come up, it's all included. Full representation. I don't know a lot of firms out there like that.
It's very important. I mean, ever since I lost my hands to that dreaded crocodile, the only thing that would scare me more at this point is getting that dreaded piece of mail that says IRS on it.
Oh, yes, yes. Can be quite scary.
Very.
But if you have L&Y in your corner, you're probably pretty good.
Yes. You need to have someone that you can count on to deal with. They call me a pirate. They are pirates.
They are. And I will tell you, too, the good thing I like about them, there's no additional cost that's associated. You have audit protection there. So they'll represent you at no additional cost going into next year.
So I keep my own gold?
You get to keep your own gold. Now, look, if you made a mistake, right, you're still going to have to pay the IRS your mistake. But knowing that they got your back, and that could be many, many man hours it's associated, you're not going to get another bill from them. You're not going to be nickel and dime from them. That's amazing.
So basically, I have my own free crew working for me.
You do. Peace of mind means everything.
Absolutely.
Peace of mind means everything. Well, can you talk about the trick-or-treat deductions for freelancers?
Oh, I love trick-or-treat.
I do too. What's your favorite candy?
I'm a big chocolate person myself,
yeah.
Especially if it has nuts in it.
Oh, I bet.
So a good Hershey's with almonds bar hits the spot.
I like malt.
Malt?
Yes, like Whoppers.
Whoppers?
Oh, yes, I like the Whoppers.
Interesting.
Very good.
Yes. So be careful as a trick-or-treating freelancer. You like to go to this company and get the treats there. You like to go to this other company and get the treats there. Mm-hmm. Pick up this and that. Get your favorite things. Make sure that you're tracking all of your deductions, or you're going to get the trick from the IRS.
You think that's something that L&Y could help us with?
Well, they could help us decide what we could actually deduct.
Oh.
Yes. They could tell us what is deductible and what is not deductible. And they could give us strategies on how to track all these things.
They could simplify my life?
Yes. Yes. By coming in and getting a good strategy on the front end, it saves you many, many hours on the back end.
I like these L&Y guys.
Yes.
I like these L&Y guys. They could do my books. They can reconcile everything, whether it be QuickBooks, FreshBooks, whatever. They could do all that, right?
Correct. Even if you're just a simple pen and paper person, we can show you how to keep track of everything.
I'm a pretty simple person.
Are you now?
I am.
Good.
I am. Okay. Good. The one thing I would say, you don't really want to ghost your tax preparer. And you don't want it when your tax preparer ghosts you either.
No, it's quite difficult when you can't get a hold of your tax preparer.
I think that's what I like about L&Y. They call you 4 times a year no matter what, even if there's nothing to talk about, to check in to see how you're doing.
And I also hear they have a 48-hour callback notice that every staff will respond to any email or phone call within 48 hours.
Wow. That's unheard of in this industry.
Yes, especially during tax season.
That's crazy. Man, from my experience, with L&Y, when you're working with those guys and young ladies, the good things is because they're in constant contact with you, there's a lot less errors and omissions, a lot less mistakes that go on as well because you pick up on those, right?
Well, yes, the more communication you have with your tax preparer, the better they are at preparing your taxes. However, you have to be careful that you're not the one ghosting your preparer.
Yes.
Because if you were waiting until the last minute and expecting to drop in and have your preparer immediately be able to file these wonderful taxes for you, they may not be able to do so.
I think the thing that I like about them is they have a lot of Google reviews, a lot of good Google reviews out there for them. So that says a lot, right? They have designations like CPAs, enrolled agents, things like that. So they're held to a higher standard. Some of them have advanced degrees like Masters of Taxation and doctorates and things like that, the CPA license. You just get better quality, it seems like, firms like L&Y. I think it's critical to do your due diligence. Would you agree?
Oh, absolutely. But I must say, I don't always trust those ghosts in the machine. You have to be careful about these weird reviews. If it looks like the same person is reviewing over and over again, it may be that they are not as legitimate as they appear to be.
That could very well be. Oh, zombie. I like zombies.
Aren't you a zombie?
Yeah, that's why I like it. Can you tell me a little bit about zombie debt and its tax implications?
Yes. So zombie debt maybe it's just an old credit card that you've forgotten years ago, and the bank gave up trying to collect it, and they send you this weird notice that says, we've just written it off. Well, hooray, I no longer owe this debt. But now I have to claim it as income.
Yes.
And I have to pay taxes on this debt that was forgiven.
Shouldn't I receive a 1099-C or something? Is that right?
Should receive a 1099-C. But if you even know that you've had debt canceled, you need to make sure that you're claiming it in your taxes. Otherwise, you'll get one of those dreaded IRS notices.
Very good, very good. Now, student loan forgiveness, there are a few exceptions associated with that if you work for the public, and there's some service loan forgiveness and that kind of stuff. The thing about LNY, they can guide me in that. They can make sure that we stay in compliance, that we stay within the confines of the lines. And that's important, especially for someone like me, like Juice.
Yes.
Man, I tell you what, the baddie business expenses. Self-employed individuals, small business owners, they can deduct expenses that are ordinary and necessary for their business. There's so many of those. You'll have things like advertising, vehicle expenses, professional fees, meals, so many different things. That's why I think it's so important to have strategies and to work with someone that can help strategize things.
Well, I have to ask you, Mr. Juice, can LNY help me on that scurvy entertainment deduction?
I will say this. They work within the confines, but if you're asking them to, find the gray area, that's not what they do. They're going to make sure you do everything legally the right way, but they're not going to bend the rules. And you don't want someone that's going to bend the rules. You want someone that's going to, find you every deduction, every legal deduction, because that's the most important thing.
I see. So they won't help me break the rules, but perhaps help me work within the rules to get every deduction I'm qualified for.
They'll make sure you do not break the rules because they're looking after you, and that's what you want.
I see.
That's what you want.
Potions. I love a good potion.
Yes.
I've heard there are potions that can make you grow big. There are potions that can make you grow small.
I like the food potion.
The food potion.
It makes me grow big.
Yes. Well, what about the potion that helps you with your property tax deductions?
Oh, like salt.
Can you explain what salt is?
Yes, sales tax and taxes that are property tax and income taxes. And currently, on an itemized deduction, you have a $10,000 cap.
$10,000 doesn't seem like much, especially with home prices going up.
It's not. But, that might change depending on this election coming up.
Yes, I've heard Mr. Trump is thinking about increasing the sales tax deductions.
Uncapped, not like the cap on your hand.
Are you talking about my hand?
Your hook.
My hook?
It's one good-looking hook, too.
Thank you. Yes, thank you. So perhaps the tax on me boat that they keep trying to charge me because they keep saying it's property, I could deduct that tax?
Correct.
Oh, save me some gold, it would.
It would. And that's where LNY would come in.
Perfect.
That's where LNY would come in. Oh, the Wraith write-offs, maximizing charitable contributions. This is a very slippery slope. One that, I'll be honest with you, I don't have a lot of experience, but I know LNY does. And LNY will make sure that I can maximize, whether it be up to 60% of my AGI that I'm putting into charities. They're going to make sure that we make that even the receipts we receive, they're from 501c3 organizations that qualify for charitable contributions.
Oh, must it be a charitable? If I give Mr. Smee, say, a little bit of booty, I can't write that off?
You cannot.
Why not? Isn't he a charitable case?
Well, he probably is, but not in the IRS's eyes.
I see. So it must be one of these charities that you're talking about.
Yes, the 501c3.
I see.
So that's the thing that's good. They'll make sure that I keep all my records, my bank records, my written acknowledgments, everything in order before they file, because after all, they have audit protection. They want to make sure that when they file it right.
I see. So let me ask you this.
Yes.
You know, I sometimes, when I'm out and about, come across, say, artwork, let's say. And I won't go into the druthers of how I acquire it, but I decide that the local church might be better off with this piece of artwork rather than myself.
Yes.
Could you help me figure out how much I can take off my taxes by giving that piece of artwork away?
Yes, you can. L&Y can help you do all of that.
Excellent.
And that's what's so great about them. It seems like they have experts. And in the areas that they don't have experts in, they reach out and they find experts and they bring them to you. They network with the right individuals that is, absolutely tailored towards each client. And towards you, Mr. Hook, I'm sure they would take well care of you.
Awesome.
The grim reaper of deadlines, the importance of our 2024 dates. Now, I know we have an extension. Hurricane Beryl pushed through the Houston area. And that date is what?
Currently, I believe it is February 3rd, 2025.
Yes, February 3rd. The only reason I know is because L&Y let me know.
Yes. But if you live in one of these newer states that have just recently been hit by, say, Hurricane Helene or Milton, there will be new dates for those states that are impacted by it.
Yes. Now, refresh my memory. If I live out of one of those areas, but my preparer is in that area, do I get the extension?
Yes, you do, because it is based on the person that will be actually filing the tax return. So if you've hired a person in one of these affected areas, your return will also be extended to that date.
I see. So if I live in like Maine, for instance, or California or Colorado, and I hire L&Y down in Houston, I would have until February 3rd?
Correct.
I like it.
That is correct.
See, it keeps getting better and better with L&Y.
Yes. We must keep in mind, though, that these extensions don't go on and on. We have an end date that we must file by. And it's important to stay on top of them at all times.
Oh, for sure.
Because missing a filing date could cost you a lot of gold.
Oh, yes. Oh, I like the Nightmare on Elm Street. What about the Nightmare on AMT Street?
Oh, it's much more scary.
Oh,
much more scary.
What does AMT stand for, Hook?
Alternative minimum tax. And it means if you make a certain amount of booty, you have to pay a minimum tax.
A booty. I like a booty.
Yes.
I don't know. Are we talking about the same booty?
I don't know. Does your booty sparkle?
Oh, the ones I like do.
Yes. So, if you make certain amounts of money, there are calculations where it does not allow you to take certain deductions to calculate a minimum tax on the amount of money that you make. And that tax could replace your overall tax if your deductions reduce you below a certain threshold.
Wow. I'm not there.
But you might be.
I hope one day
If
would
you
be
might
nice.
be.
So-
But this does not affect most people. Okay. The AMT thresholds expand all the time. Depending on, you keep talking about these candidates, which one comes into office, it may go up, it may go down. Hard to say. Definitely get with L&Y to tell you whether you're going to be subject to AMT.
For sure. I like these Illinois guys. I do. Oh, man. There sure are some spooky surprises with retirement accounts out there.
Well, tell me about it.
Well, let's just say you withdraw, I don't know, $10,000 out of your retirement account before you're 59 and a half. You could have up to a 10% penalty on something like that.
Trust me, when I lost me hook, I wanted to pull from me retirement.
And I think the thing that a lot of people don't understand about this, because I've had a similar experience as well. I think the thing that a lot of people don't understand, the penalty is in addition to the income tax, especially if it's a tax-deferred account.
Yes.
I did not know that. But Ellen White lined me out. I said, my financial advisor said I could just pull $10,000, $20,000 out. And so I pulled it out. They withheld it 10%, but they didn't. I was underreported. And then I met with Ellen White for my quarterly meeting, and they reviewed what my financial advisor did and then put corrective action in place so I wouldn't have additional penalties and interest. I owe a lot to Ellen White.
Yes. Yes. Is it fair to say that some financial advisors aren't as savvy, shall we say, in the tax code area as they should be to advise their clients on when taking that money out is the appropriate time?
I would say most are not. So I would say, it's very important that you find a preparer that, or a tax consultant, advisor, whatever their label is, that works with your financial advisor, that meets with you on a quarterly basis, because it depends on when you make that withdrawal, when you actually have to remit that to Uncle Sam.
I see. And let's say I did make that mistake. Is there time to fix it?
If you're meeting with them on a quarterly basis, yes, there is.
Good.
You wait till the end of the year, though, you've accrued all that interest and penalties because that taxes is due immediately. So it helps. It's kind of, corrective action, being a little more proactive. And that's what I like about them. They're very, very proactive.
Very good. Monstrous medical deductions. I have had to deal with a few monsters in my time, especially a certain boy that likes to cause me mischief.
Tell me about some of these medical deductions, these things that have occurred, and the percentages and how I might be able to deduct this. Can you shed some light towards me, Hook? What Ellen taught you?
Well, when I lost me Hook, of course, we had to do immediate surgery. And that's racked up many medical bills. They tried to take my gold. Of course, I wanted to deduct all that I spent so that I could get me Hook. However, I found that it was nearly impossible to qualify for the deduction because I had to spend at least 7.5% of my total income before I could deduct $1 of my cost. And so one of the things you must keep in mind is you may spend quite a deal of money, but if you don't spend at least 7.5% on your medical expenses during the year, you won't qualify for a single deduction.
Well, 7.5% seems like a high number.
Correct. If you make $100,000, you have to spend at least $7,500 in the year just to get the first dollar.
Ellen White got you on path on that, though, now.
Yes, they did. They helped me understand exactly how I could reduce my income and qualify for some deductions.
Like even mileage back and forth to the hospital and the parking there and everything that was associated with that.
Even the cost of my insurance was part of it.
Wow. I did not know that.
Correct.
I'm glad. If I ever sustain an injury like you and I have to get me a Hook, A, we'll be matching.
We'll be Hook brothers. And B, we'll be able to claim the same deductions. Yes.
Ellen White. Very good. Very good. Haunting high margins. Taxing your stock options. Can you tell me about some of these NSOs and these ISOs and things, Hook?
Well, see, I've always worked for myself, but I do know a few privateers, shall we say, that work for certain entities that, let's say, give them bonuses. And these bonuses come in the form of equity. And they own some of the company, shall we say. These bonuses, while they come in the form of stock, are income. And the IRS wants its cut, just like I like to get me cut of all the booty.
Ooh, more booty.
So, if your company issues you a stock option or any form of equity, it must be reported as some form of income. Now, the people at LNY helped me see that there may be ways to defer this income.
Tell me about the deferral.
Depending on the type of grants that you receive, you may be able to push off this income recognition until you recognize the ownership of these items. Because sometimes the stock is not given to you per se where you can actually hold it. It may be restricted, or it may be phantom stock that may not even be real. You just are granted an ownership in the company.
I see.
However, every type of equity is different, and you must consult with the people at LNY so that they can help you see what your potential tax liability could be.
And the thing is, it's even in their name. LNY tax advisors. So they advise before they prepare. That's crucial. That's absolutely crucial. Would you agree?
Absolutely. The last thing anyone wants is to go through the entire year thinking they're fine and get that dreaded IRS notice that says you owe.
Absolutely. Well, the eerie energy credits for electric vehicles. Ooh, they can be eerie. Basically, federal tax credits are available for purchasing qualified electric and plug-in hybrid cars. As an example, Hook, up to $7,500 for the new electric vehicles like the Teslas or the Rivians, and up to $4,000 for used ones. You could buy a new EV with the 75 kilowatts battery backup pack that could qualify up to $7,500 if it meets the assembly and battery sourcing requirements. It's crucial. And I didn't know these things, but LNY, they taught me all this.
I see.
And, I went and bought me a Tesla the other day. And it's bulletproof. Bulletproof.
I see.
Yeah, when I'm like in Djibouti, I want to make sure that I don't get shot. So I had to get a bulletproof EV.
But aren't you a zombie?
Yeah, I would have still lived, but it still hurts to get shot.
Oh.
So sometimes also, there are also state incentives. Some states provide additional rebates or credits. Like California, you can get up to another $2,000 if you're a low income buyer. The thing that's really good, like I say, you can go to the IRS and you can look up some of these credits yourself, or you can just call LNY. That's what I do.
Sounds excellent. Scary stock market dips. We've had a few of those in the past couple of years.
I don't want to see any more.
How do we maximize any tax losses we could incur when we have stocks that need to be sold during a dip?
Well, kind of like tax harvesting a little bit, but you got to be careful with wash sales, right?
Oh, a wash sale. Me crew washes me boat all the time.
I haven't taken a bath in years.
So a wash sale would be I sold.
Yes.
And then rebought.
30 days.
30 days. 30 days. Yes.
I don't worry about that because, like I say, I haven't taken a bath in years, so I'm not rebuying in 30 days. I'm not going to wash, but no.
I see.
Maybe I wash my bootay.
Ah.
That might be the only thing.
So that it sparkles.
Yeah, it sparkles. Yes. So, tax harvesting and tax loss carryovers are very, very important.
I see.
And the crew over at LNY, they line me out on all that stuff.
Perfect.
There's some mysterious mileage calculating auto deductions there, Hook. I'm sure you know all the travel you've done.
Yes. Being on the boat, we do the nautical mile.
Oh,
yes. But, I get a deduction for how we say every little trip I take to, meet certain people out on the ocean. But if I am changing it and it's not for me business, let's say maybe it's for to go get me hooked, shined. The amounts that I can charge are different. The calculation for the mileage is different. And so it's very important that you segregate all of your trips between business, medical, personal, and commuting miles.
Yes. So, I know they told me about this app out there called Mile IQ.
Yes, I keep it on my, what do you call it? Handheld device.
Oh, yes. You know, it makes it so much easier. I didn't know anything about this. And obviously, LNY or the juice here, I don't get any kickback off of it. I wish I did, but I just don't. But I think the thing that's really good is it simplifies my life just like LNY does. I like you.
Yes, it's a great app that will allow you to track all of your different travels and classifies it for you as to which bucket of deductions you would qualify for.
Yeah. Good stuff there, Hook. Good stuff there. All right. Frankenstein furloughs. The tax effects of layoffs. We could see some layoffs here pretty soon.
Depending on how the economy continues to go, we could see some layoffs. And if you are one of these unfortunate souls that were to suddenly find yourself without a job, there are some tax consequences to that because, perhaps you got a severance package or you went down and had
to... like someone severed off your hand there.
Correct.
I got these one-liners.
Perhaps you're standing in line and you have to collect the unemployment benefits.
Yeah.
All of these have a tax consequence on what you have to claim and what could potentially be excluded from taxable income. Difficult to know because everyone's circumstance is different.
Yeah, it is. But, yeah, we already know. LNY got us lined up.
Correct.
Yeah,
yes.
I love it. Oh, this was one of the things that was really, like I say, kind of confusing for me. The differences between the S corps and the C corps and the double taxations and just brains. Hook, can you tell me some about that? Because it's like sensory overload.
Settle down, you scurvy dog.
Okay.
Not this difficult to understand. Okay. Double taxation really comes into play for your C corporations.
Yeah.
Okay. C corporations, the types of entities that you would typically buy from, like say your Walmart, your Target, Exxon, those big companies, but they could be in smaller forms, say a private company that's also formed as a C corp. Double taxation basically means the company is going to pay the taxes instead of you. Okay? But they pay the taxes if you take money out of those companies in the form of, say, distributions or dividends.
No.
Those are also taxed.
And won't they issue me a 1099 div when that happens?
They will, yes. And so you will be paying taxes on the same money twice. The company will pay taxes and you will pay taxes.
That just doesn't seem right.
Well, the government is like me. We got to get our money somehow.
Yes. I'm so glad LNY can keep us in line on that, though.
Yes.
In compliance.
So, you may be in a corporation, but your corporation may be what is known as an S corp. An S corp is not going to be subject to double taxation. You pay the taxes on all the income, and the money belongs to you. I have an S corp.
Yeah.
LNY helped me get it.
Yeah. I think, I have one too. Yeah.
Yes.
Okay, yeah. C corp just was too much for me.
Yes, even with the low 21% tax bracket, paying an additional 15 to 20% on the dividends just seemed a mite much. I mean, overall effective 36 to 40% taxes plus the net investment taxing that you could pay pushes you over 40%. And then on top of that, you have state taxes in some places. So when you hear these people talk about paying 50% of their income, a lot of times that's what they're talking about.
Hook, they sure have educated you very well.
Yes, they have.
Well, I think we need to beware of the estate tax beast. Planning for high net worth individuals. The federal estate tax, it's imposed on estates that exceed certain thresholds. I think it's $13 million for 24.
Is it? I thought it was 11.3, but it may have gone up with inflation.
It could. Now, look. An individual with an estate worth $15 million would be subject to estate taxes on the amount that is above that, meaning the $2 million in taxable. Okay?
Yes.
With a top federal rate of 40%, meaning that potential tax bill could be, quite significant. Then you got to factor in estate taxes. States like Massachusetts or, Oregon that have estate taxes that kick in at around $1 million. So, an example is a resident of Massachusetts with a $2 million estate could face a state tax bill of over $100,000 even if there's no federal tax applies. I didn't know this, but Ellen White lined me up.
So you're saying that if I have less than the federal amount, I could still owe state taxes on me gold?
Correct.
Oh.
So the good thing is they have these strategies where they talk about lifetime giving strategies to reduce the size of the taxable estate, such as annual gifts up to $17,000 per the recipient without eating into the lifetime exemption. Basically irrevocable trusts like grats or slats, things like that. And the importance of updating beneficiary designations on retirement accounts and life insurance policies. They take care of all of that for me because I'm a zombie. I'm going to live forever, and that's okay. But I might not live forever on Earth.
Ah, yes. Yes, see, I've lost track of the time. Neverland passes a little differently than it does here.
Oh, Neverland sounds like a fabulous, fabulous place. Lots of booty, too.
Yes. Haunted by the hobby losses. I like a good hobby. I have a few.
What are your hobbies there, Hook?
I have a few cannons I like to shoot.
Ooh.
Yes.
I like to shoot a cannon, too.
Yes, and, every once in a while I like to go running around the island, visit, say, the Mermaid Lagoon, go check out the Indians. Every once in a while I'll go hunting for a lost boy or two. But these are all hobbies. I made the mistake one year of thinking, when do I turn this into a business? Mm-hmm. And I tried to claim the deduction. Mm-hmm. And wouldn't you know it, that scurvy IRS sent me a notice and said, it was a hobby, not a business.
I see.
And so I had made the mistake of bringing a few friends along and charging them, shall we say, a percentage of their gold. And wouldn't you know it, the IRS said I had to pay taxes on all the gold and didn't get to take any of my deductions.
None?
None.
Because it was a hobby and not a business.
Yes.
I see. Okay. Well, I'm sure Ellen White lined you out on that, right?
Oh, yes. They explained to me how to make it a business, how to document it better so that it looked like a business and not a hobby.
Yeah, I know they mentioned to me the other day about the 9-factor test with the IRS. And we don't need to get into the details, but I was blown away, like their just level of intelligence and how they could, just line it out. It's just that 9-part test and you're good now, I'm so thankful for them.
Yes. You need a good advisor that will keep you out of trouble.
Yes, I agree. Even for us zombies and hooks.
Yes.
Well, Hook, I want to thank you for, coming on the podcast today, sharing your experiences with Ellen White. I share mine. It's always an honor and a privilege to hang out with you.
Oh, yes. It's always difficult when you're not, shall we say, seen as the hero of the story, to find a companion that can commiserate with the experiences that we've had.
Oh, yes. All the booty. Well, thank you very much, Hook. I'm going to shake your other hand, and I look forward to our next podcast.
Yes.
Thank you, everybody. Have a blessed day.